In this week's weekly market overview, I'm going to take a look at equity indices to see just what the heck happened this week and how that'll affect us next week. Specifically, I'm going to take a look at Friday's price action in the S&P 500 because it gave us a lot of information today. And I'm going to see what that might mean from here. We'll take a look at all the different market regimes that we cover, see where everything is in the big picture. And then we'll take a look at our best performing sectors right now, which is metal. Everyone's favorite is gold, and then gold, silver. And then we're going to take a look at the energy sector because it's starting to wake up. But first, hit that like button. It costs you nothing to do, and it really helps me keep putting these out every week. While you're at it, subscribe to the channel, and then go to macro-ops.com, subscribe to our free newsletter, where you'll get the Saturday setup, which is more in-depth of what we're looking at. It's a companion to this video. And then we put out probably 5-6 other pieces of research every week for free. So let's get into it right here. First thing we're looking at, if you paid attention last week, we went over this chart on the S&P 500. This is a weekly chart. And in the bottom section here is the New York Stock Exchange advancing issues. It's a 10-week moving average of that symbol, that breadth indicator. And anytime we ever get down into this level that we're currently at, has been a really significant bottom. Now, the thing is it hit there, right? We kind of bottomed, and we are going back down to it. Now, if we dig in here, we take a look, a similar sort of thing happened here in October 2022. We went low, had a bit of an up week, and then another down week, and then that was the absolute bottom of the bottom. Similar, we go to the March 2020 period, we get down into that level, all the way up here. We first breach down into that area, and then it just keeps going before eventually reversing. Again, also back in 2018, this pretty much marked the bottom. But the point I'm getting at here is this breadth indicator we use, this simple moving average on the advancing issues. It's not a timing indicator. It's an indicator. It's something to tell you that the conditions might be available for a bottom. It doesn't tell you when the bottom is, and it doesn't tell you when to put the trade on, but it tells you that we have reached a place where the selling has reached a historical low. And normally from there, you get reversals. Again, it doesn't turn on a dime. It doesn't happen right there. It's very significant that we've hit this level. But you'll notice what I was comparing it with. That was the October 2022 bear market low, the March 2020 bear market low, the December 2018 bear market low. And from there, really, we haven't, it's very rare. So in 2011, when the US, you have to go all the way back to 2011 when the last time you had a bottoming type move, which, we're back to the global financial crisis timeframe. So they're not very common, and none of these look the same. So all we're looking at is the potential for a buying opportunity sometime. We could still reach down into the March 2020s and the October 2022 lows on the oscillator there, and or the SMA, and we might have to go there before we get a significant bottom. So let's take a look. Before we get going too far into it, let's take a look at all the indices. This is a chart of the this is the Russell, S&P 500, Dow, and NASDAQ. And it's a daily chart, and it's just obvious. You can see, obviously, today was a very bearish day. This is down 2.12%. I think we're down 2.4% on S&P, 2.6 on Russell. I can't quite see what we got on. So 3% today on NASDAQ. pretty bad day. You can see bonds got bid, but what I want to notice here is every one of these sector or indices dipped back into the bear quiet market regime. This is I've been doing some videos on the SQN indicator, and this is that on the bottom here. You can see that we dipped back into bear quiet market regime. For me, I don't have systems that trade in here other than day trading systems. So for me, this just means no man's land. There's no trades to be done. Last week, I got long NASDAQ on Sunday night. So Monday, Tuesday, exited on Wednesday with profit. And that was it. That was all we had. It looked really strong. And then it died. This is the thing about the neutral market regime, which we mostly were in right there. Now we just dipped into bear quiet. The neutral market regime, I just did a video on it earlier this week. You can check our channel. It is, even though it seems benign, it actually is kind of a volatile place to be. Typically what happens in a neutral market regime is moves tend to look a lot stronger, and they convince everybody that that a market has bottomed, or that we're off, a direction has been chosen and it's going to move aggressively in that direction. And this is your opportunity. And you can see that that's kind of what happened here. You can see it kind of gets into that neutral market regime over here on NASDAQ, trending down, 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 down. And so you're thinking worst bear market in the world, then stops and goes up, 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 up. And then you think to yourself, wow, the bull market is on again. And then what happens? Bam, 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 back down. So this is why I stick with, this is a mean reversion market environment. I use my curvy trading system to trade mean reversion in here. And that's the system that got me long, got me my profit, got me out before the chaos began. Now, all this is great. There's one thing that I want to look at here, and we're going to go deep. We're going to nerd out here, you and I, on price action and what we can learn. This is some real like nerdy price action geek stuff we're going to talk about here. And it all starts from the daily chart here. You can see it opened at the top of the day, closed at the bottom. On Russell, on S&P, opened at the top, straight down to the bottom, closed at the lows. There's no wick. You can't see any wick down here at the bottom, or any, whatever those are called, shadows at the bottom maybe. Dow, straight down. NASDAQ, straight down and closed on its lows. So I'm going to bring you to my intraday chart. Let me just clean all these up here real quick. For market profile, folks, we could dig on that. Let me pull up the daily chart here so you can see what we're looking at. It's, the volume profile makes it a little, gives you a little bit more information that this area down in here is kind of useful, but we're getting to lows of the year. And if we go into previous years, if it'll update, you can see that there was a low volume node at the 5,600 level or so from 2024. And that's where this is starting to build up at. Okay. That was not the nerdy stuff. This is going to be the nerdy stuff. Okay. This is regular trading hours of the S&P 500. So the regular session when stocks open and close. And what we can see is from the open, we had some orders go through, and then it went straight down for 1, 2, 3, 4, 5, 6, 7, 8, 9, 45 minutes, about an hour, a little bit, more selling, a little bit. Now let me just bring on the full picture, because then the market closed, and I'm just going to turn off the profile here. So the market opens right here, okay, and then it closes over here. And what happens on the close? It closes at the absolute lows of the day, and then the overnight, the Globex session, the electronic trading session, continues to sell. Okay. This period right here is what we're everything from the open, because there was some stuff that happened overnight or whatever, but it really didn't move until the open today. So the first thing I want to point out is day traders. So we got two cohorts. We have the high time frame traders. Okay. Make that a little bit bigger. And then low time frame traders equals little money, small money. Okay. So big money, they trade off higher time frame charts, right? They're focused on like 5700, 5750, 5650, 5635, 5600. They're just kind of, hey, get me in at 5600, get me out, get me out 1,000 contracts at, any price above 5600. Just like think of, they're not focused on 56, 42, 25. They're not focused on little niche things. And so when the high time frame traders are there, the only way, or they're mostly focused on big key levels. Low time frame traders are like one lot, 5 lot traders. And the thing that you want to focus, thing to distinguish is low time frame traders cannot cause a 2.42% sell off in the largest index in the world. You, me, and even 1,000 other people trading like 1 and 2 lot micros or even 10 lot minis are not going to have enough firepower to force a directional trade like this on a Friday, especially. And so that's significant to notice. That tells me that today's sell-off was big money getting out of the way for whatever reason. That tells me, because we're looking at the biggest index in the world, and it opened at the high and closed at the low, and it was, I'm probably 10 to 15, so maybe 1 hour of total up candles throughout the day of 1/6 of the day was slightly lifted, and it wasn't even lifted all that high. So this is very significant news. This happened on a Friday. Okay, think about that. That's like a shift. Now there was 23 billion in pension that came into the market. Okay, it was one of the biggest pension fund days of the last few years. So that could very well have been it. And it could have been, let's say, maybe hedging, unwinding some hedges. Okay. So maybe they've been buying all week to try to get positioned for the big rotation. It's the end of the quarter. So that could be why it would happen. All these things are possibilities to why that could happen. But we're talking about something like $23 billion was supposed to come to market today in reposition in pension funds. So, it could have been front run all week long and then, closing out positions. Because you got to also think about, if it's high time frame traders, they're going to be the ones that cause a move like this. They are a lot more sophisticated in the trades that they put on. They don't just go and short 57.15 with a buy to cover at 56.85 or something like that. They have, oftentimes they've got, broken wing butterfly. They've got all sorts of spreads. They're going to be across multiple markets, in options, in futures, in ETF, certainly in rates and all these other things, to have like one big complex trade. And so that could be why this happens. Just thinking about it, going this short into the weekend, or liquidating this long going into a weekend, makes me think that there's some headlines that have been leaked, or there's been some news that people are anticipating, maybe to do with something very, very large globally. war news, new attacks, any number of things it could be. That's the kind of surface level thing that I would think about when this happens on a day like this. Like, oh no, we're in a bear quiet market regime, and we just had this sort of price action. So it opens the door for really risky type of things. Whereas if this happened in like a bull quiet market regime, I would just say, great, we have a buying opportunity. But because the market regime based on price action and direction and volatility is saying we're in a bear regime, that opens up the door to a lot more chaotic type of solutions. So when we go back to our weekly chart here, what does cause also a bottom, in addition to bottoming out on these levels here, is a capitulation. So if you recall, probably like October 2022, a lot of people capitulated into this bear market low over here. Everybody was kind of like, oh, that's the route, we're done, we're everything's good, and then it just sold off for the next 2 months straight, and a lot of people capitulated here, and then that was the bottom. Starting October, it just from 3,600 goes up to 60, almost 6,150 or so. Not in a direct line, but pretty smoothly in the if you're looking at it. And so looking over here, this is something we haven't seen since we started to see that back in 2022. It kind of looked like it in October of 2023 also. So this is not like a regular bull market dip. Something bigger is happening. We could be at the end of it. We could still have some more time. But anyway, this was very significant to me. I saw this. I realized that you don't, and it continued after hours. It just kept going lower. There was no reprieve in sight. So I think either all it has to do is just unwinding the big pension fund trade that people were trying to front run. Maybe that could have been it. It could have been unwinding some volatility on that to ensure the trades went through, and a number of things, because it was a known event, so people likely were trying to front run. Or it could be, we are in a very, very tense time in the world where there's multiple wars going on and increased attentions around the world, and attacks from the United States has been attacking in Yemen very aggressively. There's been a number of things going on, and certainly headlines have been quite wild. So the opportunity for a closed market and a bunch of stuff to happen over a weekend, I would be more open to the idea of something being happening. Not saying that it will happen, but be prepared. Finally, let's take a look at so this is the market regime tracker, and it just gives me a good idea of what's happening in the world, and if there's something to keep an eye on. So all of the indices are in bear quiet. All of the rates and a good amount of the currencies are in neutral. So okay, well, that's not interesting. But now we start to see metals are in a bull quiet. Metals are rising quite aggressively. Natural gas rising quite aggressively. Nothing going on really in the regimes on energy. It's not too informative here, but it was substantially more neutral last week than it is this week. A lot, there was a little bit more. All of the indices were in neutral. We had over half of everything was in neutral, and it's a pretty decent. We've got currencies in bear quiet. We've got cattle in coffee in bull quiet, or bull volatile. Bear. That should be bear volatile, I think. No, those are quiet. Bear quiet. Oh, I see. I'm colorblind. That's why. We have no bear volatiles right now. That's the thing. Finally, so back into here, I'm seeing metals are strong. So let's take a look at metals. So we've been in this gold trade off and on for the last year or so. It's been this is the June contract only. So let's do the June contract. It's been really a moneymaker for a year now, going from 2,000 to 3,000, so a 50% move. Notice we've had multiple trades along the way. We had a new signal. This is a roll. So we had an exit come out. We trail stopped out last week. It looks like a new entry signal is about to fire off again. So we'll be looking to get long there. We have a long signal on copper, so we'll probably be getting long copper again. Silver is starting to trend and move into the bull quiet market regime after a lot of sideways. So potentially be buying a breakout on silver. Platinum is nothing. What's interesting is the especially RBOB is where I'm in. The gasoline trade. I got long, curvy long on RBOB. It's moved to the top of the range, so I would be looking for a reversal to get short here. If what we're worried about in the market here, if something does happen over the weekend, it will most likely affect, if it's war related or something like that, it'll probably have some effect in the energy markets and metals, because those seem to be where the reactions to everything is. Currently, I'm only in RBOB futures or long RBOB right now, gas futures. I've gotten out of everything else. And so going forward into next week, what I want to see, what I'm hoping to see on the week is, well, I'm not hoping to see, what I'm expecting to see. I am in no man's land on trading the indices right now. I'm over in the currencies, I'm in the metals, and I'm in energy. And that's where I want to be focused right now, because that's where the moves are rewarding, being rewarded through my systems, through our systems here at MacroOps. And so the potential for a increased volatility downside after such a potentially nice up move last week got completely crushed. The opportunity is, for me, it's kind of like this. This is kind of how not even kind of, this is what I'm mostly paying attention to here, is this range. Expecting, if we move back into neutral, I would expect move within that range. If something violent happens, we flush this low, the 2025 low, and we're going to get a spike on this much lower. But we are starting the most bullish time of the year. One of the most bullish months of the year, I should say. The March low to April, mid-April period is historically, seasonally, a pretty bullish period for the S&P. So that could be the case. Today could have been it was an outlier event on the how much money from pension funds was coming into the market. So again, that could very well have been the whole reason that today was Friday was a little odd. So not a lot of clarity going forward from where we stand right here. I would expect, if we can get out of this market regime and start to get a little more clarity, the bull quiet and everything like that, if we get back out of it and we start moving in neutral, then this low is fine. It was just it just is what it is. Historically, these markets rise, but they do go through periods of complete chaos. For our end, we are up in MacroOps. We are at high water mark on my system, on the quant portfolio I trade. I believe we're pretty close to high water mark, or if not high water mark, on the discretionary, macro discretionary portfolio. While the S&P is down, 5 and has been down 10% on the year, we are outperforming in volatility by a long shot. So we're not hitting the drawdowns that the S&P or the regular markets are having. And we're still hitting high water marks while the S&P is down still something like 5% on the year. We're well above that, hundreds of basis points higher, thousands of basis points higher than the S&P. Okay, that's all I got this week. If you like this, leave a comment, ask some questions in the comment, reach out to me on Twitter at Chris D Macro. Love you all. Bye.